Hello, I am Wael Yahya, Certified Financial Technician Expert from the International Federation of Technical Analysts. In this video, we will apply the classical technical analysis view over the short term for the S&P 500 index. So let's take a look at the bigger picture. We can see the following. Over the monthly chart, we do have some kind of bearish major structure as long as the index is below 4,800 points, which is the monthly resistance. And once upon a time we had an uptrend over the weekly chart, which is clearly broken and got its reversal signal from a major head and shoulders reversal pattern with a neckline was running through around 4,245, and it is considered that the market is under strong selling pressure as long as it is below this level over the medium and long-term pictures. And we can also notice that the downtrend is well established by lower highs over the medium term, as well as the channel line running and connecting lower lows over the medium term. So the market is suffering from bearish environment over the major structure as well as bearish environment over the medium and long-term picture. Let's check the short-term details. We can see that there is much more bearishness over the short term, over the daily chart. For the final maybe 2 or 3 months, we are having a downtrend. And this downtrend and this downtrend is valid until now. So keep in mind that the index is under strong selling pressure as long as it is running within this downtrend channel over the short term. Of course, we are having much kind of volatility, and the index is oscillating below the downtrend channel line and above the downtrend channel line, which is giving some false signals of an expected correction to the upside, because when the index returns above the downtrend channel line, it's expected that it will start creating some kind of bullishness over the short term, and the positive outlook may be getting some correction to the upside. But as we can see, it is oscillating up and down, above and below the channel line, repeatedly giving a lot of false signals. So in order to have a confirmed correction to the upside, the index should break above the short-term resistance. We can see around 3,925 approximately. This is the first condition that should be met. Also, it should break above the downtrend short-term trend line. That's the second condition. The third condition, it should manage to continue to close above these two resistances on daily and weekly basis. And finally, we should find some increasing volume during the break and fading or decreasing volume during the confirmation. So these are very important conditions that should be met in order to give us a clear signal of a correction. That correction may target around 4,100 points over the short term, and it may target 4,245 points over the medium term. Don't think of the targets guaranteed. Just wait for the confirmed signals of the correction. If the market did not give these required conditions for a valid confirmed correction, the outlook will be continuing on the negative side, and any break once again below the channel line, the weekly channel line, will indicate the resume of the impulsive wave to the downside, targeting much lower levels, maybe around the psychological level near 3,500 levels. So keep in mind that until now, at least for today, and as long as the S&P 500 index is below 3,925, you cannot confirm any type of a correction. Only when it is broken and confirmed, we can expect some kind of correction. And if the correction took place, the two targets are not guaranteed. It may reflect again to the downside from any target, maybe the first one, maybe just before it. You cannot confirm that the correction should or may reach all the targets that you expect. So for the time being, things are simple. The S&P index is under selling pressure. It is moving downwards within a downtrend channel line over the very short term. It is expected to continue to do so, and the conditions required for a correction against the prevailing trend are hard to fulfill. And until that time, do not apply positive tactics to the market, and try to think more on the bearish side, try to think more on the negative side. You should wait for virtual trading by short selling, not by going long, because going long in these circumstances will be a counter trend technique, which is not preferable for the time being, and it's not a good habit to acquire to counter trend against the prevailing trend. That's it for the S&P 500. Thank you for watching. See you next time, and please like, share and subscribe, and don't forget the notification bell. See you soon.